What's up traders, John Howell here, officialjohnhowell.com, and in this segment, in this video, I'm going to teach you a charting technique to help you when you're asking yourself the question, which trend do I use? I see so many people say the trend is your friend. Well, the trend's been going up, so do we keep buying the market? I'd say no, but anyway, let's get straight into the whiteboard, and we're going to see exactly what trend to use and what's really important for you to understand. So let's get to the whiteboard.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright, so let's get straight into it, guys. One thing I do say here, right, is this, is like the question is, which trend do I use? Which trend do I use? And this is really important. And there's two major trends that I like to use, and you can adapt these to your time frames. There's two, and you always want to compare two different time frames, okay? So I personally like to trade the daily chart. So let's do this over here, all right? Let's do this over here. Let's do this, all right? So we're going to have we're going to have the daily chart over here. So you know what? I need new markets. That's on my to-do list today after doing this video. Alright, so let's have this, we're going to have this daily chart over here, alright? And we're going to have this, and then, so therefore we have the daily chart. I trade the daily chart, so my next time frame up is what? The weekly chart. Right? If this is a 60-minute chart, you're going to have this as a daily chart. If this was a 15-minute time frame or a 5-minute time frame, you want to use the hourly, 2-hourly chart. Make sense? So that's the two different things, okay? So which trend do I use is always a good question when trading the markets, but here's what I say. Firstly, you want to identify your parameters. Forget trading for a minute, we want to identify parameters. So parameters simply means we see the market, and let's just say the market, for example, the last many years has been doing this, right? We know that, right? We know that's what the market's mostly doing. I'm drawing a simple analysis here on the charts, but that's what the market's been doing. So what we need to do, we need to identify the major support levels, the major resistance levels, and then we need to identify the major support and resistance levels. Make sense? So this could be over 4 or 5 year time frame on the weekly chart. With me so far? So now we've got these levels here. Which trend do I use is always important, but on the daily chart, now we know where the major support and resistance levels, we know that okay, the major trend is going up, okay? But on the daily chart, what we're looking for on the daily chart is we're looking at the peaks and troughs, okay? We're looking at the peaks and troughs. And so here's the thing. It's not about the 3-month trend, the 12-month trend, the 2-year trend, or 6-month trend. It's not anything about that anymore, okay? It's like, I used to trade the 3-month trend all the time, but it's actually quite different. So what we're looking for here on the daily chart is we're looking at the peaks and troughs, okay? So we're looking at here on the peaks and troughs, and we can see the peaks and troughs are going down, 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 right? Which trend do I use? Where's the latest peak and trough? That's what you should be using. The latest major peak and trough on the daily chart, because that's showing you where we're going. Look back at any chart. If we start to get a major higher peak and then a higher trough, this higher peak, a higher trough, what's that saying? That's showing a trend change. That's what's important, not what trend do I use. This is important because this here is likely to start doing this now. Make sense? And this here is this now changed the trend overall. Make sense? So, but by looking at the peaks and troughs, we can see what's actually happening. You look at right now as I do this recording, the Russell and Nasdaq, that's actually making lower peaks and lower troughs as well, moving forward. So what we can see here, guys, is we can actually see that can you see that? You can. Cool. You can see here, guys, that making lower peaks and lower troughs. Now, you want to have that with the goal in mind of knowing that, hang on a minute, right here, this point right here, it's like, hang on, why did it bounce off there? Well, hang on a minute, this point right here, X marks the spot, that might be this exact same X right here. Make sense? So even if the market's going low peaks and low troughs, low peaks and low troughs, you don't use a trend, okay? Forget the trend, because there is no such as a trend as your friend anymore. And especially right now, especially when we're likely to get some more downside to come moving over the next 12 months or so. You know what I mean? So we can see that. We can see the market's going up. We can see low peaks and low troughs. So this here is where you'll be very cautious to see what happens. So, but if it does break through, if the market is here and the market just does this, comes down and gives you another low peak, well that's what you're focusing on, right? You're making this low trough, low peak. That's what you're focusing on. You're not focusing on, oh well, you know, well the 2 years has been up, so I'm just going to get buying this thing, and the market just does this. Do you know what I'm saying? So that's what you want to focus on, and that's what you want to go. It's not that's not what trend do I focus on anymore. Okay, when you're looking at the weekly chart, remember you're looking at the bigger time frame chart to identify these big areas that major huge funds and thousands of millions of people are going to notice. And this is where you want to step aside and let the traders do what they need to do, and then go on from there. Make sense? So which trend do I use? Nada. Nothing. You know, don't use any trend. Use the peaks and troughs. Use a bigger time frame to identify those major areas where the market's had a lot of problems getting through and breaking through, support and resistance levels. Use those areas to know where you should be. It's a warning to enter or exit, or not even to get into a trade. Because if you're looking for a short signal here and you're seeing that the market's at a support level there, guess what? Now we're likely to see, so now we just don't know what's going to happen, right? Because it's a lower probability. So in this area here, X marks a spot. On a daily chart, I wouldn't be taking any trade. Makes sense? But if the market here is X marks a spot, and then we actually do get a little upward move, and we get a little high peak and high trough, well, guess what? Then that's what I could be seeing as well too. My phone just started ringing in production. What are you doing? Does it make sense, guys? Alright guys, well that's it for me with this video. There's no chart segment in this one. I just want to make a real quick video for you guys to show you which trend do I use. And this is what I'm using all the time. It's always in the peaks and troughs. Because I don't care if this trend has been going up for a long time, and let's just get the rubber here for a minute. I don't care if the trend has been going up and you've been getting high peaks and high troughs all the time. If we start to get a major lower, we start to get a major lower trough, and then we start to get a major lower peak, and especially in this major lower peak, we're starting to get an increase in volume around this lower peak. Well, guess what's likely to happen? We're likely to spend more time to the downside. Make sense? So guys, that is one way. That is one way we can actually use the charts. But remember, it's always in the peaks and troughs. So we start to make low peaks, and we start to break down after making consecutive high peaks and high troughs. We break down, we make a lower trough. Hang on a minute, lower trough, downtrend, lower peak, downtrend, and we get some increase in volume, especially some down move. You better believe we've got a really good probability chance of it breaking it down. Make sense? So that's the first thing I do say. The next thing I do say is, now you know that, okay? Now you know that, that's always my first go-to, okay? Price action first, indicator second. Price action first, indicator second, okay? So here's the next thing that I like to do, which is helping me identify and gauge what is actually happening. What trend do I use right now? And I like to use two on the daily chart. That is, I still use my weekly parameters over here, support and resistance, okay? But what I use two MAs, okay? So the first one I use is a 20, which is a bit more of a shorter term, and the second one I use is a 52. Okay, 52 days, which is a bit more. So this is like a monthly, okay? This is like a monthly, and this here is like a 3 month. Okay, so and this is what I'm looking for. If let's just say, for example, this blue line, that blue line is the 52. Okay, so we see that there. So, and let's just say, for example, this red line represents the 20, okay? So here's the thing, if you're looking at a trend and looking at analysis and looking at what's actually happening moving forward, well to me, what makes more sense? If you're looking for a signal, if both moving averages are separated and they're going down, would you look for more buy signals or short signals? Short signals, right? Because the momentum, short-term, monthly, and 3-month is now saying, hey, momentum is down, it's spreading out. You look for more short signals here. What about in this area here when the moving average is a crossover? There's no trend at all, right? It's sideways. Market is sideways. So you step aside, right? So you might say, okay, peaks and troughs are doing whatever they're doing, but hang on, the market's sideways. The indicators, 2 moving averages are showing me not a clear indication of what's happening there, right? So then, and then suddenly what happens, the market starts breaking down a little bit more. You start to get a separation of the moving average as well too, and say, boom, it starts to go down, okay? But then what happens if the market does this? Where the 52 starts to do this, starts to pick up through there, okay? And then suddenly you start to get this type of action. Well, what's happening now? So you've actually went from here. You actually went from this is where you want to go short, where the moving averages are pointing down. It's showing you momentum in that direction. You want to stay out of this area because there's no momentum at all. Remember, you want to be in the momentum there. This is where you want to go short, okay? Because this is where your momentum is. Now you don't just go short. You make sure you have you make sure you have a strict trading signal, and this is where you want to go long or buy it. Why? Because now the momentum is shifting up here. Okay, up, this is down, and this is down as well too. So, anyway guys, I hope that helps you out. This here is which trend do I use? And this is what you should be using. Use firstly peaks and troughs, but then if you really want something simple, look at the moving averages. Use 2 different moving averages, a bit more of a shorter time frame, and a bit more of a longer time frame. I also add in there as well too a 200. Why? Because all the fund managers use it, and it's also good to use. A 200 is a bit more long term, and if we get the 200 here and the 52 here and the 20 there, then you better believe we have some momentum on the downside. All right, guys, I'm out of here. This is John Howell here. Remember, success can be yours if you go climb, so step up, take massive action, and face your fears today.